All right, I'm going to let everybody flow into the room. If you are here to watch Investing in Space, all things extraterrestrial, you're in the wrong place. No, if you're looking at the rise of self-storage opportunities with Ryan Gibson and myself, you are in the right place. And when we talk about investing in space, we're talking about self-storage space. So we're not talking about Mars and doing all that. That's a topic of another day. All right, so we are going to dive in because this is actually the number one major investment class as far as returns in the last 10 years. I don't think that like real estate for sure, but I think that as an asset class, major asset class, and Ryan, you'll have to correct me if I'm wrong. All the Bitcoiners out there are going to say, hey, that's the best. Major asset classes, traditional asset classes, this is number one.
That's right. Number one among all other major asset class types in real estate. I
Yeah.
don't know anything about how Bitcoin's performed, so but I'm sure it's done really well.
Right. Yeah. I still remember. Yeah. I have some, but there's people out there that have done very well in it. And that's it. Hey, there's Aaron. We got a bunch of folks on. All right. So guys, I'm going to dive in because what we want to talk about is how to make money in self-storage, what kind of opportunities out there. And you have a technician with you here today, Ryan Gibson, who is absolutely awesome. He's been working with our clients. Ryan, how many years is it? Because I remember pre-COVID, all that stuff we're diving
Pre-COVID.
in. I remember Hawaii years ago. I think it was 2016. Uh,
Yep.
and
Yeah,
I did,
2017.
yeah,
No, 20, yeah, something like that.
it
I don't know.
was.
My daughter was running around and she was a little baby with Michael's son. So
Yeah. Somebody says number one based on what metric? Return, right?
yeah, definitely during a recession too.
Yeah. So we're going to dive into all this, and here's kind of the rules. Yeah, if you're watching this live, ask questions in chat and Q&A, like comments to chat, and we'll handle them. If you're trying to get Ryan's attention, it's going to be difficult. He's going to be going over his presentation and going over a lot of numbers. But what you do is put in the Q&A, if you have a serious question, non-clarifying question, but a serious question, put it in there on in that Q&A, and then I will ask Ryan questions at the end of his presentation. So he's going to go over all things storage. And before you go, well, who's this Ryan guy? Yada yada yada. Ryan right now with Spartan, he's the how do you call yourself? The chief investment officer?
Investment officer, co-founder, storage guy, president, whatever it might be.
See, I always know Ryan as the guy that started Spartan, and he and Scott, and they're great guys and amazing. Just they've done so well for our clients. So I always like to introduce people that do nice things for our clients. And no, I don't get paid on your investment. This is something that I never will do. What we do is we advocate for those that help our clients. And at Anderson, that's a big thing. We really do care about that prosper in our mission. We have preserve, protect, and prosper. You hear us talking all the time about the protect, how to minimize taxes, keep your stuff away from lawyer Snoops, Uncle Sam. But you don't oftentimes sit here and hear us saying, here's how to make more money. And this is one of the groups that we work with who has just done phenomenal for our clients. I would say the worst return I've seen from an exited transaction is in the 20% plus annual return range. I'm sure you'll go through some of those numbers, but that's what I'm seeing on K1s, guys. So like Ryan can't say, oh, we made 10% or 20% or 30%. I could just look at the K1 and say, oh, you made 25%. I don't have to listen to what anybody says. I can actually look at the numbers. And I think that they do a great job. So they manage over, I think it's getting close to $750 million now, right? It's over 700 million.
That's right. Yeah, about 700 million. We just bought three huge properties in the Pacific Northwest, actually two in Portland, one in Vancouver, Washington last week. So that pretty close to, if not above the $700 million mark. So excited about that. And then we bought two in Georgia last week as well in the Kingsland area.
So you guys are just absolutely on a tear. And this is why he's here. He's going to be talking to get, and yes, there'll be a recording. Yes, it'll be sent out. I'll probably post this on my YouTube channel too. If you haven't been to my YouTube channel, just if you just type in YouTube and Toby Mathis, you'll probably find me. Please like and subscribe, by the way. And then my partner Clint Coons too has a great channel. But we'll be posting this up there so you can go share it with other folks. But this is why we are so bullish on this, is because it has been a phenomenal just growth in the last 10 years, has self-storage been, but it's also still a great opportunity because we're not even close to getting towards that top. And if there's one thing about Americans is, man, we love to store stuff. So this is a great opportunity. I'm invested significantly. Our firm is invested significantly, and our clients have had great returns working with Ryan and his organization. So what we're going to do is we're going to hand off the why are we looking at self-storage? What are the opportunities? Why is it so different than traditional investing? And kind of what's going on right now, and then why now is actually a good time to invest. And I'm just going to hand it to Ryan and say, dig right on into that meat, buddy. I think that you already have good questions coming through. I'll be moderating the questions, and I may pop in once in a while and go, hey, Ryan, here's a really good question. Let's answer it.
Awesome. Well, thanks, Toby. Hey, I'm Ryan, and I'm going to be going into self-storage stuff. So I'm going to go ahead and share my screen, and I think everybody can see that now. Yeah, we can see my presentation. All right, cool.
You can see it.
All right. Well, we're going to go right into it. So you're probably, the first thing that I like to show is just data. So people probably think, hey, is self-storage is kind of coming up everywhere. I feel like it's all over the place. It's in my neighborhood. They're building it. My friend's building it. Ryan's building it now, whatever. And the reason why is because if you look at how much self-storage has increased in utilization from Americans over the last 30, call it 40 years now, you can see that bottom left there in 1991, the average American used 2 square feet per person. And now that number has surpassed 6 square feet per person in 2020. What is that? 2021, 2020, something like that. And the projections are continued to increase. So if you're like, man, I think self-storage is coming up everywhere and it's filling up everywhere, you're right, because more and more people are using it. There is a square footage per capita for self-storage. And the big players in the space are these guys, right? They're Public Storage, CubeSmart, Extra Space, NSA is another REIT. And you just see these big box publicly traded companies all over the place. And we're going to talk about some other players in the space today. But just to give you a sense of my background, I was actually a pilot and learned how to fly and ended up becoming a airline pilot for Delta. And I was at Delta for a while and retired from the airlines effectively. And what made me want to kind of get into real estate investing is, there was just some part of the job that I wasn't getting. And so you read this book on one of my layovers actually, and got inspired by Robert C. Kiyosaki's Cash Flow Quadrant to just start my own business and be an investor. And so we went out and basically built one of the largest self-storage companies, but we're the 36th largest self-storage company now in America. And that's kind of some of the 12 states and the facilities that we're in today. Across the United States. We're heavy in Texas, heavy in the Sun Belt region, Georgia, Florida, Tennessee. Again, we have some smattering of properties up in the Pacific Northwest. We're building a lot of the PNW right now. And, I did all this stuff while I juggled lots of things, like juggled business, juggled flying, juggled my family, and just really grinded to build a company while being a full-time employee. So I actually share my story with everybody on Passive Income Pilots podcast. So Toby's been on my podcast 3 times now. And, but I share everything that I've learned over the years on my podcast. And you can see here, if you scan the QR code, I have guests like Toby on there. Clint Coons has been on there from Anderson Advisors, and really just, love to share what I do. And, my why has always been more time with family. I want passive income. I want to do things that I love and spend time with my investors and really build those relationships. That picture on the left-hand side there is actually we do an investor ski retreat every year, and that was in Lake Tahoe the other year with all of our investors. And we have a lot of Anderson clients that invest that were actually pictured in there, bringing their families. So a lot of things that I love: row, fly, ski, hike, get out there, so and spend time with the kids. But before we get into like all this data, who here has used a self storage? Maybe give me like a thumbs up, a heart. You've ever used a unit? You've rented a unit. You know what I'm talking about. Okay, like everybody, right? So I always ask this question because people are like, "Man, storage is kind of silly." But like if you think about it, 1 in every 9 Americans actually uses a self storage. And throw me another comment or like if you also have a garage or you had a garage when you were using self storage. Let's see how many more. Okay, so about a 33% reduction in thumbs up, right? Well, you guys all meet the national average here. So 66% of people who actually use a self storage also have a garage. So if you think that, oh well, this guy's got a bunch of storage or a big garage or whatever, they're not going to use self storage. Just simply not true. Now show of hands or some comments. You know, why did you use self storage? What was your whole point? Why did you actually rent a self storage unit and go take the time and move your stuff into storage? And I can't see the comments, but throw it in the chat. Let me know what you had, and I'm going to shout out some things here. So, um, passive income pilots is the name of the podcast. But okay, so cars, too many cars, relocation, moved into a smaller unit, HOA rules, daughter came back from home, I was moving, thought I'd use the stuff later, moving, et cetera, et cetera. So a lot of things like that, right? Decluttering the home, move town, interim location removing, storing a boat, cleaned out my brother's house. Okay, so you guys all fall under the categories that I talked about that I'm going to show you, which is there's 4 reasons why people use self storage: death, divorce, displacement, and downsizing. So everybody talked a lot about number 3, which is displacement. You moved, your daughter came home, somebody had a job change, somebody went and bought a new home or sold a house, whatever it might be. So these are the reasons why people use self storage. Yeah, plumbing issues, heirlooms, large furniture before we sell, relocate, right? It's because of life events. People are moving because they have something going on in their life and they're using self storage because of it. And that doesn't go anywhere, right? So you're never going to not have a situation where you need a self storage facility in your life. And these are a lot of reasons that do it. This is actually 70% of our customer base right now. And what's exciting about this is, and I'll get to it later, is displacement. There's not a lot of displacement going on actually in America. And there's a lot of pent up demand for self storage that's occurring because of the housing market. And that's, we see that as a massive opportunity. So, which generation? Baby boomer, Gen X, greatest generation, greatest and silent, Gen X. Who do you guys think uses self storage the most? Show of hands or throw it in the comment. I think millennials use it the most, baby boomers, Gen Z. Who's using self storage the most? Baby boomers, X, Gen Z. Okay, some good questions or good guesses. So the answer is actually it's pretty tied to millennial and Gen X, and the reason why is because of life events, right? So they like millennials and Gen X's are now having families. So I'm a millennial. I'm an older millennial. I'm the better edge side of that, or whatever you want to say. I'm just joking. But basically, millennials and Gen X's are basically using self storage because they're having kids, they're buying their first homes, they're moving, they're getting their jobs relocated, they're getting promoted at work, whatever it might be. They're in the zone for using storage. So actually, we look for cities like Portland, for example. We just bought a couple of properties in the Pacific Northwest. The average age there is 38.3, and that's a perfect market for a place where people have a lot of storage need. We're building another property out in the Southeast in Savannah, Georgia, where people need that space, right? So baby boomers actually used to be our biggest customer, but now that they're kind of settling down with their moving and their life events, they're becoming less and less of a customer. But now millennials and Gen X's are taking it. Yeah, woohoo from Savannah. I agree. Good market. We're just about to build one there right now. And again, that's life events. So people use self storage because of life events. Yes, we have too much stuff. Yes, we can't get rid of things. But generally, what people do, they're using self storage no matter what's going on, no matter how economically rich or poor their situation is. They're going to use self storage no matter what. And 30% of our other customers are using it for a business. So I didn't see a lot of business use on there, but landscaping companies, sheet metal contractors, people have Amazon, Etsy, or moving companies, or furniture staging companies. A lot of these companies are using self-storage because they have a business. I mean, I just had a guy call me. He's got a bunch of classic cars that needs to use a self-storage space because that's his business, right? So we have a ton of people that use it for personal business use. And again, I was kind of a doubter of the industry. You know, this was my, probably what my apartment looked like. It wasn't as nice, when I was just recently married to my wife, and we didn't have any kids, right? So we didn't have any stuff. Like it was just this is just how life was. And then of course you have kids, and your apartment looks like this, or your house looks like this, right? You get all the toys and things. That's actually pretty clean. But when you have all this stuff, you start kind of going, hey, like I'm going to need self storage because I need to renovate this thing and make a bigger house or whatever. So when I renovated my house, I put myself into self storage, and so I kind of thought it was a silly asset class, and thankfully we had owned our own self storage facility at the time, and I was able to utilize my own place to store my belongings. And so that's just one of the many reasons. And I joke, as an airline pilot, I was flying during COVID, like right when COVID hit, and I was flying an airplane down to Orlando, and this airplane had 189 seats on it, and there was one passenger on the plane going to Orlando, and I was like, welcome aboard your private jet. But I gotta ask, where are you going? What's so important? Nobody's flying right now. It's COVID. And she said, well, my mom just passed away, and I'm moving down to Florida. I'm flying down to Florida to put her stuff into self storage. So when you think about why people use self storage, like it never stops. Like people are always using self storage. And in fact, during COVID, we had a massive boom where we had more customers than ever and higher rents than we've ever seen. And I talk about furniture staging companies. One of the first self storages we built, the first 10 units got scooped up by a furniture staging company because they were building 10,000 houses within a mile of our property. So the furniture staging company literally just set up at our property since there was so much moving going on. And storage is like a subscription service. So the average cost of a unit nationwide is about $88 per month. And so if you think about it, like the lower cost of a subscription and the more you can put it on auto pay, the less you think about it, right? I mean, as us Americans, we have so many subscriptions, Netflix and Disney and all the things, Amazon and Prime and this and that. And we kind of forget what we have. And it's kind of like a gym membership, right? Where we sign up for this gym membership, we think we're going to go, and we never go, and then we want to cancel, but we don't want to cancel because it's really hard. And that's kind of what self storage is like, but it's worse because not only when you go to cancel do you have to like go to the unit and physically go there, but you have to move out all this stuff. So our average customer stay, I was just looking at it in our portfolio right now, is 30 months. 30 months. So even though our leases are month to month, people stay on an average of 30 months in our portfolio because once you move your stuff in, you really don't want to move your stuff out, right? I mean, who wants to spend a Saturday with a U-Haul, sifting through a bunch of stuff that you really have no idea what you're going to do with it, right? What do I do with this old couch? Do I put it on Craigslist? Do I put it on whatever it might be? It's just going to stay there, and you just like, just forget it. I'll just come back later and do it at another time, and then you end up staying there another year. But here's why we got into the business. We got into the business because we used to flip houses and build condos and do all those things. And we got into the business because we really wanted something that easy to own, easy to evict, easy to maintain. And these are the 3 E's of self-storage. So that's why we really choose the space. So when you think about it, this is like your typical real estate things that you got to deal with, right? When you get into real estate, it sounds exciting and sexy and everything, and you're going to get all this passive income, but then you have these things that get in your way, like toilets, leasing agents, appliances, water heaters, evictions, trashed units, right? And these are all the things that people don't talk about and that are not as fun. And we went through all this stuff with having rentals, and in storage, you don't have any toilets. We have like 30,000 units, and we have maybe 25 toilets in our entire portfolio. If you had 30,000 units of single family homes or apartments, you're going to have like 60,000 toilets probably on average, or maybe 45,000. So a lot of things to take care of. We don't have to have a person at our property. We can lease all of our stuff all automated. And we'll talk about that in a minute. We don't have any any countertops or anything like that in our facility. We don't have any water heaters, and we are not subject to eviction laws. So I just mentioned buying a property in Portland, and everybody think, ooh, Portland, like that's a hard market to invest in. Well, kind of. I mean, there is no eviction laws that apply to self-storage in the state of Oregon or in the city of Portland. So we can be in a market that has really good income and good population trends, and we don't have to worry about eviction moratoriums because we can kick somebody out if they don't pay after 30 days, which is great. And the last thing is we don't have these trash units, right? When somebody moves out, they're just moving out. We sweep the floor and clean out the unit and turn it over. So this is how storage has performed over the last 40 years, right? So when you think about every major recession we've ever had, you can see the Black Monday of 1987, the dot-com bubble burst of 2000, the Great Financial Recession of 2008, and then COVID most recently was the biggest downturn, right? And when you think about how the GDP declined, that's the blue line, and the gold line there on the screen is how storage performed during that same time. So it is something that goes into it goes into recession resilient mode when the economy changes, because here's what happens when the economy is really bad. People start doing things like they start selling houses or moving or downsizing or getting foreclosed upon, and they have to move, they have to change, they have all this stuff, maybe it's a stressful environment for people, and they get divorced or whatever it might be. So, and then likewise, when the economy is booming and people are buying things and relocating and moving, same type of environment. And so this is kind of some of the penetration of customers over the last decade or so. You can see that we have an increasing trend. The trend in storage is only increasing. We're seeing more households using self-storage. So dating back to 2013, 8.96% of Americans use self-storage. Now that's up to over 11%, and that continues to climb and increasing. But I talked about easy to evict, and I see some questions in the chat window here, and I think it's important to kind of go over this. Like, how does this work? How does this easy to evict really? What does that really mean? Well, if you look at a storage lease, this is what it says. It says the stored property is subject to lien in favor of the owner. So that means that if a customer doesn't pay, we can lien their belongings and auction them off, usually within 30 days. And so if they don't pay, we can sell the stuff, and any money that we make on the collection of or the sale of those belongings, we can get that money back to pay for our unit. Now, I know everybody's like, oh, well, this is like storage wars, right? It's like, yeah, kind of. It happens actually a little bit. It's a little bit less, dramatic as that, right? Just like anything on TV, it's a little over dramatized, but the same is true, right? Where we have an online auction, selfstorageauctions.net usually is where we sell our belongings, and people they file the liens in the paper, and people can come to the website, and they can see what's for sale. It's not behind a closed door. They can actually see the goods, and they can bid on it and buy it. And when they buy it, we collect the revenue, and any past due rent is paid to us, and then anything above that is basically goes to the storage renter, right? So if there was $1 million in there and somebody gave us $500,000 for it, and we would get whatever we lost in rent, and the rest of the money would go to the owner. So we don't really make money on auctions, but we get our unit back, right? Where if you think about it, like if you're renting out a single family home or a multifamily unit, and you have to evict somebody, oh my God, that could take a year. You're spending thousands of dollars, and you could get a trash unit at the end and nothing, right? You could get nothing from the tenant. So this is why we really like this. This is like this in almost every state. The next thing, like easy to operate. So if they fail to pay, we can restrict their access to the property. So if you don't pay after 3 days, we lock your unit out. So we have a gate software, whatever, that if you don't pay and after a couple of days, you can't get into your own unit, right? So you can't even get access to the property until you pay. And the owner is not responsible for any damage. So I saw somebody say, "Oh, you have rats or whatever," but at the end of the day, we do our best job, keeping pest control and of course providing excellent customer service to our facilities. But at the end of the day, we're not really responsible for any damage inside the unit, which is insane. Easy to maintain. Slab on grade metal buildings. We're going to talk about the different unit types here in a second, but you're not allowed to make, as a customer, you're not allowed to make any alterations to the space whatsoever. So, okay, when we talk about space, I like to joke around about this a little bit. So we're going to go over the most common unit types you're going to see in a self-storage facilities and the different features and benefits of each one. So this is a 5x5, corrugated walls, slab on grade, right? Metal door. This is a 5x10, corrugated walls, slab on grade, metal door. Notice a theme? They're all the same. They're all just a little bit bigger in different shapes. Now, of course, we have the inside units, we have the outside units, but you can see another 10x10, slab on grade, corrugated metal walls, metal door, looks pretty similar. And we can put in a lot of these units in a facility. So there's our 10x15, very common unit you see in a self-storage facility. And then there's our 10x20. Now, Lauren is there in the picture to feature this unit, but other than that, it's corrugated metal walls and a roll-up door. So just to kind of give you some perspective of where I'm coming from, I used to invest a lot in like turnkey rentals where someone finds you a house, you go buy it, and you can kind of see this is my house that I bought here in Cleveland, just outside of Cleveland. And I started buying little rental properties, and it was great. It was leased up, and it had a tenant, and all these things. But when that tenant moved out, I had no revenue for 6 months. It took me 6 months to find a new tenant, and I was scared to death because this tenant vacated in October, and that was the winter time, and no one wants to move in the middle of the wintertime in Cleveland. And it took me 6 months to find a tenant. And when the tenant moved in, I had to have the city come down and inspect the property and do a whole C of O and all this stuff. It took me $2,500 to repair this property to get it so somebody could move in. So it was crazy. So again, when I finally did get a tenant in April, and they were in there for a year, my landlord called, or my property management company called me up and said, "Hey, do you want to raise the rent? And how much? And what are you thinking?" And I'm just thinking, "Oh my God, no, I don't want to raise the rent, because what if they move again and I lose my revenue for 6 months? And then I also have to have $2,500 in repairs." I'm like, "No, God, please keep them in there, keep them happy, like lower their rent for all I care." Um, but for a self-storage facility, um, you think someone's going to move over $10 a month? Probably not, right? So we can change our rents every 30 days. In fact, our rents just went up. June 1st, we sent out about 10, we have about 35,000 customers. We just sent out rent increases on 10,000 units effective June 1st. So we plan about a 17% attrition rate on that. Usually we see high single digits. People are moving out anyway, but we kind of monitor who moves out, who stays. But in general, $10 a month, 500 units, that's $5,000 increase in monthly rent. Monthly rent, $60,000 increase in annual rent. So if you think about how much cash you can generate just when doing a simple rent increase, this is one of the huge value add strategies that you can deploy in self storage. So a little bit about kind of who I am, who my company is, and what we do, investment opportunities that we provide for investors. We were the fourth fastest growing privately held real estate company in America last year. And we're the 126th fastest private company growing overall. And we're actually now the 36th largest operator of self-storage in the US. And our national brand is called Free Up Storage. So if you have ever heard of Free Up Storage, that's what we operate all of our facilities under. But Spartan Investment Group is kind of where we make the investment. This is my business partner, co-founder, Scott Lewis. Toby mentioned who Scott was in the beginning. Scott's an Army vet, served in Iraqi freedom. He was a neighbor of mine that I met in DC, and that's how we got into this business together as neighbors. So if you want to meet your business partner, just knock on your neighbor's door and see if they want to do business with you. No, just kidding. We just kind of met serendipitously like that. And so we started Spartan, and we've really grown a portfolio nationwide of self-storage facilities. Here's just a quick snapshot, about over 30,000 doors. We have about 150 employees now. And this slide's a little dated. We've raised about 350 million from investors to go buy self-storage facilities together. And we've made the Vet 100 and Inc. 500 now, I guess 4 years in a row. Like I said, we met flipping houses here in DC. So I was an airline pilot for Alaska Airlines. Here in this picture, I was actually flying my daughter. It was her first flight, 2-month-old, over to Hawaii. And I met Scott. I was actually living in the White House on the left there. And our first flip was the brown house in the middle, and he was on the house to the right. So we met as neighbors, and our first project together was literally flipping a house in between us. And this stuff just didn't scale, right? We really wanted to start a company that we could scale and be in an asset class that was one of the top performers in America. So we quickly switched over to self-storage. And we do the whole thing. So we are a turnkey operator. So we find, fund, and finish our projects. So we basically are a vertically integrated company. So we'll find a piece of raw land, and we'll build a self-storage facility and fully operate it and lease it up. We'll find existing properties like we just closed on last week, where we'll buy the property and then run the operations and improve it. And we share in our profits with our investors. So we share in the cash flow, and we share in the upside potential as well. This is one of the due diligence checklist forms that we share with our clients and our investors. Before we do anything with a self-storage property, we put it through a thorough 700-point due diligence checklist. And if you scan that QR code, we can give you a copy of this, and we can give you a copy of it later too. Just shoot me an email. But we take the property through all this due diligence in order to make sure it's going to be a good one for you and for us at Spartan. So, um, and Toby mentioned this at the beginning, a lot of our realized investments, I think the worst investment we've ever done, 12.1% realized annual IRR. And then our most recent self-storage project was like an 83% IRR. So crazy, good returns. Usually we end up in like the 20 to 30% annual return range for investors, but we've had about 16 exits in the real estate space overall. Typical things that we buy really nice Class A property, like the ones that you see on the screen here. The one on the bottom right there, actually, we built that facility just outside of Seattle. And on the bottom, we buy some mom and pop stuff. Believe it or not, but 70% of facilities out there are owned by mom and pops. These are people that built the property a long time ago, and they just have no need for it, or they don't have any heirs to give it to, or they have a basis in it where they want to make a huge profit, so they're selling it. And these are undermanaged properties that typically need a lot of work, or they need to just be run by a more professional operator. And that's really make our money. And I'm going to kind of go into just examples below. This is a picture of land just outside of Portland, actually, in Sandy, Oregon, where we actually built a brand new facility. And so this is an example of some of the things that we do. I mean, we probably build maybe 30% of the properties, and we buy existing about 70%. But here's a great example of what we built. We took this piece of land here, and we built this beautiful Class A facility in Sandy, Oregon. So you can see it on the front here, what we built. And then we also, once we build this property, we will put our own national brand on it called Free Up Storage, which is pictured here. And then we take the property through its lease up. So we'll actually go out and lease it up and take it through. So likewise, what we'll also do is we'll buy existing properties like this one. We bought the 735 unit property, and it had all this raw land on it. So we decided to take this 2 acres of expansion potential, and we put in 2 buildings. You can see the buildings here, and we actually added on about 240 units, and that's our construction team out there getting those units put up. And we'll talk about this example later on in the presentation. But how does this really compare to multifamily, single family, other investment types? So I think we all get into real estate for the tax advantaged. I mean, if I think of I've, on my show, on my podcast, I've interviewed dozens of people about why do you love self-storage? And I think we're all into real estate for tax advantages, right? I think that's one of the, depreciation, Section 179, whatever, the things that Toby talks about all the time. Depreciation is huge, right? And so you get that on multifamily, self-storage, single family. You can actually get depreciation on self-storage. I'm going to go through an example of one of those. And so I think it's all kind of tax advantaged in that sense. Average stay. I've kind of changed my opinion a little bit on this. I actually think self-storage has probably got the better average stay out of all other asset class types. Like if you think about multifamily or single family, yeah, maybe the average stay is like 12 or 13 months. I couldn't really find some good data on it at the time I looked, but our specific portfolio gets about 30 months of average stay now. So that's pretty good. And that includes properties we just built and things like that. So there's a really good average stay. Economies of scale. This is where I think we start to pull away from single family, because it's hard to scale a lot of single family homes into one spot. And it's hard to manage a lot of single family homes all over the place, right? But self-storage, you can get thousands of units under one roof, or hundreds of units, same with multifamily. And but really, I think the differences are just automation, rent recapture, and low maintenance. I think that's why this has been a top performer, is because you can put a property management software into your facility and it will just completely run itself. This is like property technology. You probably heard this word prop tech. What is prop tech? Property technology is where you can automate things. And self-storage is really one of those only businesses I feel that really got this down and it really works for. So we have kiosks, and we have a call center, and we have online rentals where 24 hours a day, 7 days a week, you can move yourself in. So you can actually book a unit online. You can book a unit on your phone. You can book a unit on our kiosk machine, and you can move yourself in whenever you want. And I'll never forget the first self-storage facility we ever bought. My wife was actually our director of operations in the beginning, and we were on a hike, and she's like, "Hey, I just moved 4 people into Aspen Park Self Storage, which is one of the first properties we owned. And she said, I was like, what? And she's like, yeah, I can see right here. They just moved themselves in. And so, and there wasn't even anybody at that property. So if you can find another space that can, lease a multifamily or single family home without anybody talking to anybody, that'd be crazy, right? But self-storage is one of those industries where you can do that. Rent recapture is basically saying like, hey, if you don't pay, we can recapture the rent through the auction process. We can actually get our unit back faster and lease it again when somebody when somebody doesn't pay or moves out. So we can actually get to renting units faster than a lot of other industry asset classes. So, and then low maintenance. We don't have a set of appliances, a set of countertops, cabinets, trim, paint, carpet. We don't have any of that. And that provides us with a great low maintenance thing. So you might be wondering, okay, so then that's great, but then how do you actually add value to an empty box, right? How do you add value to air? And one of the examples I love to give is like when we go find a storage unit, we're going to go look in a market where this property is maybe charging $30 a month for that unit. And we'll look around the market and we'll look at all the other competition and we'll say, hey, the competition's all charging $60 for that same unit. But for whatever reason, this mom and pop operator, they just like to be full with a wait list. They don't like to do any marketing. They don't like to upset the apple cart. They just like to be at $30 a month and they'd be full. And we go to the market's charging 60. So what we do is we buy this property and say, hey, we can basically double the unit economic occupancy, right? Because we can charge 60 when like everybody else is charging 60. So we'll raise the rent to maybe just $50 just to be kind of nice. And maybe that customer says, I'm moving out. But the reality is the person that moves in is now going to move in at that $60 rent. So now instead of having a $30 unit, you have a $60 unit. And that's where you can literally add value in storage without even doing any work, right? Other than buying the property and doing all the things that go into the real estate, but you're not doing any physical upgrades to the property when you do this. You're not repainting or redoing the inside of the unit or anything like that. You're simply just mark to market. You're taking the current rent and you're moving it up to what the market is charging. And that's what's the beautiful part of this space is it's just such a fragmented industry with mom and pop ownership that hasn't really adopted best practice for what other operators are doing, which is incredible. So get the move-in at 160 and life is good. Now, speaking of improvements, right? We still do make improvements and we have a value add strategy at Spartan where we will actually take like this old property right here, Devonshire Mini Storage. We bought this from an older couple that was retiring. They didn't want to drive across town anymore. And we bought this storage facility north of Denver. We put a nice professional sign in there. We did some professional landscaping, professional fence, and basically made the place better, right? We painted it and all that. We actually sold this. There was a handful of Anderson clients that were in this deal. I believe the payout was like 22 or 23% annually. And they made cash flow along the way. They made like a 7 or 8% cash on cash monthly distribution while we held this asset, and then we sold it for a profit. And this is the type of stuff that we do. These are kind of some of our sites you can see around the country. The Sandy site, some sites in Arkansas, Georgia, Texas, and so on. And we just give it a curb appeal. We want to make it feel like this is a place that people want to go and store their stuff. Some of the properties we come by and it looks like this. Looks like some of these offices are so nasty. I mean, we had one where there was like 12 cats that were living in the office and we had to like evict all the cats and rip out all the carpets and completely renovate the office. And who wants to store your stuff in a facility where you walk in and it smells like, a zoo, right? And so we do these office renovations that just make these properties look and feel professional and give that the investor or the customer a sense of security and safety when they walk in, because that's really who your customer is in storage, is like a 70-year-old woman who wants to come into the property and feel really good about where they're storing. So we'll do things like change the latches, we'll redo the fencing, we'll put in security, lighting, and really just give the facility a good look and feel. Here's some other ways to make money in storage, and I'll cover these a little bit later, but I noted on the bottom, I put the Bader Be Assured. That's our tenant insurance plan. So we actually, a lot of mom and pop facilities, they don't offer tenant insurance. So when we come in, we'll require tenant insurance, and then we can't require them to buy our plan, but what we can do is we can say, hey, if you use our plan, it's really easy, just sign here. And then that allows us to use a self-storage, offer tenant insurance. And if there's 500 units and 13, 500 people buy our plan, that's $13 of extra income on 500 units that we can get every single month. And the insurance company gives us a split with the profit. So we can actually get 70% of that insurance money that comes in from the unit. So when you think about value add strategy, there's a ton of it. And you can do things like U-Haul, sell merchandise, rent vans, things like that. So let's talk about an exit strategy. So, okay, so we go buy these properties. Who's actually buying them? Who's actually, if Spartan's going out and buying all these facilities from mom and pops, then who's actually going out and buying all these properties from Spartan, right? And so we kind of view ourselves as like an aggregator of this stuff. So we go out and we buy all these little tiny properties, we build them, we buy them, whatever it is, and we kind of scoop up a lot of mom and pops because the big boys don't really want to go buy up all these little tiny properties. They don't want to take the time that we do to build them, to buy them all over the country, right? What they want to do is they want to come in and buy big groups of assets at scale. And these are all the big REITs and publicly traded companies that are coming in and buying these assets from us. So we've sold 8 in the last year alone. Some of them, actually, our average cap rate in 2023 on the sale was 3.75% average cap rate. So they are paying a healthy premium for these assets and the ability to get scale in certain markets. And they love the fact that we're aggregating a bunch of properties in the same spot. Like specifically, if you look at this map, these are just some of the assets that we hold. And you can see we cluster these properties together. And that gives us benefits, right? Because if these are really good locations where there's high traffic counts, good drive-by visibility, and we kind of cluster them together, then they can get efficiencies, right? So a REIT or a buyer will go, hey, and for us too, we can operate them a little bit better. Where we say, hey, we don't just have this one store manager on an island in the middle of nowhere. We have, 6 properties, for example, in Chattanooga, where we can have one district manager overseeing that entire region, and then they can be checking in and kind of providing support. So that's what the REITs want. And they want that economies of scale. That's basically going to allow them to make additional income and overall give us better returns, which is what we really like. Now, when we think about, what are 5 ways you can make money on a single family home? Well, the answer is you can't, right? Your tenant moves in there, which is great. And if they move out, no more income. But for storage, you can actually diversify your income quite a bit. And when you think about the tenant insurance that I talked about, selling tenant insurance, this is some of the 5 ways you can make money in storage. Tenant insurance has to be top on your list. Renting units is number 1, of course, all the time. That's your primary business. But number 2 has got to be tenant insurance. That is going to be your number 1 way to make money. Merchandise sales, this is a good way to entice your customers, have a good convenient location. You're not going to make millions of dollars on selling merchandise, boxes and tape and things like that. You're not going to make a lot of your income on that, but it's good to offer it. We also do boat and vehicle storage. So we do RV spots. We probably have over 1,000 RV and boat storage spots. This is great for like excess land where the city might not let you build additional buildings or additional storage units, because the storage units are always going to pay your best rent per square foot. But hey, if you got that extra land in the back that you're not doing anything with, why not offer some RV storage, 50, $100 a month, whatever it might be, depending on the market. And there's a ton of demand for it because there's a lot of people that own boats and RVs now. We rent out trucks. This is one of our branded trucks that we have at one of our properties, and we rent this out. We offer a free truck rental with the move-in, and that helps kind of lease up our facilities a little bit quicker. And the other thing we do is we have a lot of cell phone towers. So we'll actually get paid a triple net lease for putting these cell phone towers on our property, which is incredible. All right, so we talked about it, right? We talked the talk. We kind of went through, why self-storage, why people are using it, how people are using it, and some of the different ways to make money. But I want to show you guys actually how we did one, how we actually bought a property, the real numbers that go into doing one of these properties. I'm going to show you a case study. So one of the properties that we bought in Texas actually is this one, and we paid $6 million for it. And for those that are out there that don't know anything about commercial real estate, there's really only one thing that I want you to take away from this. That's, NOI divided by cap rate is basically how you determine value in commercial real estate. So when we bought this property, it had $443,000 of NOI, or net operating income. And so that's basically a 7.38% cap rate. So $6 million. We paid about a 7.38% cap rate for this. We bought it in April, and what was cool about this property that we bought was that it came with a car wash, but we really loved the vacant land for expansion in the middle that you see there, and it had U-Haul truck rentals on it. And so just to kind of walk you through this property, this was an existing property we purchased with our investors, had interior and exterior storage. It actually had about 735 units of both about 81,000 square feet. And it had the climate controlled units, about 40% were climate controlled and about 60% non. And it came with this car wash, which we just sub parceled this out and sold it. And then it also had a U-Haul truck rental business. So we could actually rent trucks for ancillary income. But the best part about this was this 2 acres here. So the 2 acres you see on the screen, we actually turned that into those 2 buildings and built additional units. And you could see that our construction company went out there, we built these units, and we were able to build a really good mix of like indoor and outdoor units. So because we knew what the customers wanted, because we already had a full property. And you can see that, once we had those buildings built, we did some promotional stuff and got the facility leased up. And those are the brand new buildings as the day after we put them onto the market. And we do things like Chamber of Commerce events and really promote the property so that we can lease it up. So, how do you like fund something like this, right? So, we have something in real estate called the capital stack, which is basically all the debt and all the equity you need to do a deal. So for this deal, we went out and raised money from investors. Our minimums are 100,000, and we basically raised $2.3 million from a handful of investors. And then we went to the bank next door to get a loan. And we basically put together $7.5 million. And you're probably thinking, wait, I thought you paid $6 million for the property. Why would you get $7.5 million? Well, good question. So this is how we spent the money. So we spent the money on the purchase price. We expanded the property for $1.6 million. We had $250K set aside for reserves and $250K for closing costs. Now, the due diligence here is something that you really want to make sure you get a handle on. If you put the property under contract, we put it under due diligence for about 60 days, and we do everything: property inspection, roof inspection, HVAC. We do a geotech, we do a survey, we do title, we do escrow, we do financial due diligence, we study the market, we drive to all the competitors, everything that goes on in due diligence you want to do on a property like this. And we gave you that checklist a little earlier, but you can scan that code and if you can get it if you didn't see it earlier. But basically, we go through all these things right in our due diligence. You can go to our website and download our due diligence checklist, and et cetera, et cetera. But when we put a property under contract like this, you want to actually go through all the financials too. So you want to go through all the rent roll. This is all the rent roll on a property. This is what all your customers are currently paying that live on the that are not live on the property, but that are customers in your facility. And you basically want to take a pop under the hood of the actual financials as well. So like your P&L, your profit and loss statement, you want to see what the owner has been realizing in rent and expenses, so that you can do this. So, and then the next thing I do is we study the market. So we'll actually go and knock on all of our competitors, and we'll pretend to mystery shop. We'll say, hey, we're looking to rent a unit. How do you have any units? And, they might say, oh, we don't have any units. We have a wait list, and, get in line, buddy. There's nothing available, right? And so we actually mystery shopped all the competitors, and what we found, and we find this in a lot of markets where.
All right, I'm going to pop in here because it looks like Ryan may have just frozen. So I'm going to let Ryan get his stuff together. Maybe my team can reach out to him and see what happened to his internet. You guys all seeing a frozen Ryan? This is going to give me an opportunity to answer a bunch of your questions because there's over 30 of them. Yeah, you guys are all seeing frozen Ryan. So Jen, maybe call him and see if we can't get that connection. Questions that I could answer real quickly, just because there's a few. Oops, they're on it. Now he's gone. Here, I just get my chat back up. Can men be frigid? Here we go. All right. All right. So I can see your guys' chat now. So let me go to your Q&A. Does Spartan allow self-directed IRA or 401k investments? All right. So he hasn't gotten into investing with Spartan right now. yes, you can invest directly with Spartan. They have three funds, and I'll let Ryan go over what those funds are and who is eligible to invest in it. It's accredited investors. But yes, you can use a self-directed IRA or 401k to invest in those. That's not a problem. Are Spartan's offerings for non-accredited investors? At this time, I do not believe so. But again, we'll get Ryan to clarify that as if they do have any investments. The purpose of today is to talk about self-storage. You can get involved in self-storage whether you're investing through a fund or not. So you could actually get involved by just learning the ropes of what is an opportunity in self-storage and actually bringing them to groups like Ryan and either partnering on deals or finding deals that they can acquire and they do pay on. So like there's lots of ways that you could actually participate. You could just become, if you're a real estate agent, maybe this is something that you start looking for, knowing what kind of numbers they're looking at. One thing about Spartan is that all of their investments, from what I've seen, are completely transparent. They provide you with detailed financials on a consistent basis. I think it's almost quarterly. Let's see, I'm actually in the market to invest the profits of a house. So this might be perfect for you, right? And yes, I believe you can 1031 exchange into these as well. Now, the questions I want to answer, because there was a bunch of them, involved tax. In fact, I reached out to you guys in chat and said, hey, there's a bunch of tax questions, so let me explain this. When you saw the image of Spartan building one of their buildings and you saw the cement going down and you saw the infrastructure and you saw a lot of the materials, a lot of that is considered land improvement. And so when you see the parking lots, when you see a lot of the things that are attached just to the cement, those things could actually be classified as 15-year property under the Internal Revenue Code. Why is that important? Because virtually all of their deals, I've yet to see one where he didn't elect to have a cost segregation done. They break it out, and those portions of the investment can be deducted in a much quicker time frame. It's 15-year property, and you can actually bonus it. Hey, Ryan, you're back, I
I'm
think.
back. Yeah,
Okay.
I think so. Hopefully.
The internet loves us today. So this
It
is
really does.
uh, I was just answering some questions. I actually have 35 questions right now queued. So I was
Sweet.
knocking out some of the tax questions. Do you remember where you were in your presentation?
Oh yeah. Yeah,
As a,
we're good.
whenever you're presenting, it's always fun when your presentation just decides to go.
It's okay.
It's it's always the little bit of sweat going down your back thing. So just
It's
breathe.
all good.
Yeah.
It's all good. We're in real estate, so this is nothing. Like I'll take this problem over anything. I mean, it sucks, but
But I did want to go over some of these. Yeah, some folks are saying they didn't realize there was a Q&A. Yeah, the Q&A is where you put your specific questions of Ryan. I have a laundry list. I'm going to wait for you to get done to go over them, but I did want to hit the tax because folks were asking about cost segregation.
yeah,
When you started showing the building of these buildings, how much of these buildings would you say is 5, 7, and 15-year property, which means it's
yeah.
much faster to depreciate than the rest of the building?
Usually at least 30%.
At least 30%. And in some
Yeah,
cases, I've seen it get higher. I've seen you guys get close
yeah,
to percent, right?
yeah. I mean, we've had like 60%, but I like to just aim low a little bit just to be a little bit more conservative because you don't want to overplan your taxes on something that doesn't come to fruition. So, but yeah, it's pretty significant. We've seen it 65% on some things, but very depreciable asset.
Yeah. So if you're an investor and you put money in, let's say that you invested $100,000, there's a good chance in that first year that you'd get back 30 or 40, $50,000 first year
Yep.
passive loss, because you're not a general partner in this. I don't know if you even have that as an option for some people to participate, but for the most part, it's going to be passive. There are ways to make that deductible against your W-2 if you qualify as a real estate professional. And in this particular case, you'd have to put at least 500 hours in between you and a spouse on all of your rental property. You'd have to aggregate them all together and treat all your investments as one. And there are ways to do it, but that is a huge incentive when you're looking at investing in self-storage. That said,
Totally.
I'm going to get out of your hair and let you continue. You want to reshare your screen at wherever you're
Yeah.
at. Okay.
Yeah. Actually, it's cool. I'm, can everybody see the screen again? Yeah, I think it's up there. Okay. I'm going to share an example. I'm going to give you a real K1 and show how there was losses here in just a minute. But what I was talking about was like, hey, we're looking at a new property we're going to buy. How do we know that there's value to add? That's really what we're going through right now. And I think one of the ways that we do that, if you look at the screen, this is a 5 by 10 unit mix. And when you look at see, if you look at the little bottom, it just says $47 and 67 units. That means that 67 people, 67 of your units are paying $47 a month. Now, if you look at all the units above that, those people are not paying your $47 a month. Now, when we looked at the market, a 5 by 10 was actually going for $53. So not only do you have a bunch of customers that aren't paying what everybody else is paying, which isn't fair, but they're paying less than whatever every competitor is charging, right? So when we went through this, we go line by line by line when we take a property over, and we figured out that there was $165,000 a year in rents, right? So between what our rent, this subject site was charging and what the competition was charging. And by the way, we had the best facility in the market. So it's important to know how you stand against your competition, but we had the best property in the market, but yet we're charging less rent by $165,000 a year. That's a crazy value add opportunity. And so what we basically say is, well, we're going to tell our investors, we're not going to raise it 165. We're going to just project, right, for the purpose of their investment, $72,000 a year over 18 months. And what actually that does to value in real estate, if you that gives you $6,000 of monthly extra cash flow, and that adds $1 million of value to your property. That's NOI divided by cap rate. $72,000 divided by, I think I used like a 6.38% cap rate. That gives you $1 million of value just by raising the rents to what everybody's charging. And then we got a civil engineer. Next thing you want to do on a property like this, you get a civil engineer. We have one in-house, and we have our own construction company that basically looks at this site and says, hey, how much can you actually build? You've got 2 acres, but what setbacks do you need? What easements? What is actually going to, what can you actually build on the site? Our civil engineer basically said, hey, listen, you can build about 40,000 square feet. And if you look at this picture, you can see there's a line, a gas line that goes right through that land. And then you got to put in a little detention pond. So just know that like, just because you have a bunch of land doesn't mean you can use it all, right? You have to make sure you talk to a civil engineer on that. So what we said was, yeah, he says there's 40,000 square feet we can build, but let's actually underwrite 20,000 square feet. And so at the time, this is pre-COVID construction prices, but we could build a 20,000 square foot facility for about $1 million. Now that would be about like, I don't know. It'd be about $70 or $80 a foot, probably $80 to be conservative. So construction costs have gone up quite a bit. And then that would add, that revenue of those additional units would add about $2.34 million in value. So totally worth doing, right? And then when we look at a property, we're going to do initial improvements. We're going to paint the place, make it look nice. We renovated the office. We're going to increase our rents to where they are in the market. We're going to expand the property, and then we're going to add ancillary revenue like tenant insurance. Like this property had no tenant insurance. And so the other thing too is like Toby was mentioning accelerated depreciation. This is all the 5 and 15-year life on the property. We got an estimate done at 1.7 million. We ended up getting a $2.1 million tax break in the first year. So when you think about it, I guess that's more than 30%, I guess. Am I doing the math right? Of our components in the building were actually depreciable. So what does that mean? That means you, the investor, this is an investor who invested 50K and they got a loss. So if you look here, they got about a $21,745 loss per $50,000 invested, largely due to depreciation. And what's cool about that is this is the cash flow that they received, right? They got about $3,600 a year on that $50,000 investment. So they made between 7 and 8% return on the cash flow. And that's taxable, right? This is taxable income. However, because you have the depreciation, and then they made some sale from profit or whatever, but because you had depreciation of $21,745, you don't pay any taxes in the first 5 years because that bonus depreciation basically shields your taxable gain from the investment that you're making. Now, of course, I'm not a tax attorney, so find Toby and hunt him down. But Basically the way I understand it, passive income can be offset by passive losses. And you can get more creative with it and become an active real estate investor. But that's not what I'm talking about today. But these are basically ways to shield your taxable income from your investments. And that's why real estate is such a powerful tool. So this is how we made it work, right? So this is kind of our typical value add plan. We basically said, hey, we're going to buy this property. We're going to raise rents $72,000 a year, right? We're going to get in there. We're going to raise the rents to market. We're going to give ourselves 18 months, whatever, right? But here's what actually happened. We got in there and we just said, you know what? Why would we not raise everybody's rents to what everybody's supposed to be paying right away? And we did that, and we actually raised the rents $205,000 a year. So investors got more cash flow from that. And then we said, hey, we're going to expand this property in the back, this 20,000 square feet. We said, but, we were just talking to the construction company, and they said it's more economical just to build it all at once. So if you're going to build 40,000 anytime, you don't just build it all now. And so you know what? We said, screw it. We're going to do that. So we actually built all 40,000 square feet at the same time because it's more economical to do it that way. So that increased our revenue by $30,000 or $300,000 per year. And then we had that existing money in place, right? So we told investors, hey, this is our proposed plan on the left. This is what actually happened. And we said we were going to sell the property for about $10 million after we got the NOI up to $670,000. But we ended up selling the property for $14.4 million, or about a 6.6% cap rate. So huge gain, huge value in buying this. So I wanted to transition a little bit and talk about some deals that we're looking at now. The way we look at properties, kind of how we assess them, but this deal's in Port Wentworth, Georgia, which I saw somebody give a shout out to Savannah, Georgia. So this deal is actually just outside of Savannah in Port Wentworth. And I'm going to talk about how we came to find this property. So you can see this picture. This is a rendering of a property that we're just about to put a shovel in the ground and start building. And this is kind of how we look at returns for investors. So we try to target about a 20+% return when we're looking at ground up development. So this deal projects a 21.8% annualized return. And this is a 6-year hold. So if you're an investor in something like this, you're going to be in it for 6 years because it's going to take us time to build the property, lease it up, and then eventually sell it. With a yield on cost of 10.2%, that's effectively like the cap rate on all the costs that we have going into the property based on our stabilized rents. And so you're going to 2.3x your money in basically 6 years. This is where the property's at, if you're not sure where Port Wentworth is. But what we like is that this is our 17th property that we're putting in Georgia. So we already have a whole team there. We already have people built. We've already built units in Georgia. We already have managers out there running the site. So really, it fits nicely into our existing portfolio of properties there. And this is kind of how we build a property. So when we build it from the ground up, we've actually been trying to entitle this property. We've been entitling this property. We've actually got it already entitled for 18 months. So we found this deal almost 2 years ago, and then put it under contract or whatever. And it took us 18 months to get all the city approvals in line. And so now that we have all that in line, we actually went and bought the land in March of 2024. Now we're planning to break ground in July. So in 2 months from now, and after we get our building permits. And then it takes us about a year to build a property that size. That facility is about 100,000 square feet, which gives us about 75,000 square feet to rent out, because you have to account for the elevators and things like that. Can't rent the elevators, so that space doesn't count towards your gross square footage. So 75,000 square feet is your sweet spot for a self-storage. That's like just enough revenue to justify a couple of employees, and it's a really efficient spot. And then it takes us a couple years, right? So if you're in an investment like this and you're building from the ground up, you're not just gonna, the day you open, you're full, right? I mean, that can happen. We've had that happen in a couple of our facilities, but generally it's going to take a couple years to lease up a property like that. And then we get it stabilized in January 2028, and the investors start making cash flow. Now, this property pays really great returns, doesn't have cash flow right away. And that's when you're investing in storage for a ground up. That's something that you might want to consider. So what we like about this property is that, normally when you invest in ground up, you want to make sure you have entitlements in hand. You have land that you can actually put a shovel in the ground pretty quickly after building, right? And the other thing that we like is the population growth. I don't know if anybody's familiar with Savannah, but There's a military base here within like 5 minutes of our property. The airport is right there. And Savannah is one of the most busiest ports in America. It's like the fourth busiest. And Gulfstream, Hyundai, PHA, Hyundai is building their EV plant there. It's already underway. Um, Soyeon is coming in, Gulfstream, and there's a huge uh, population influx of workers to the region, and developers plan on building 4,000 residential units within 5 miles of our property, or actually three mile radius of our site. And so that's people moving to an area. That's where you want to build self storage. The other thing that we like is that, like I said, I was talking about earlier, there's all these different companies that have moved into the area, like IKEA. And if you look at just the population of Port Wentworth, I mean, it is J curve almost, right? Up and to the right, where people are moving into Port Wentworth because of the growing demand for all the jobs that are coming to the market. But we won't even touch a self storage property unless the rents are over $20. We won't build a self-storage property unless the rents are at least $20 annually. So when we look at Port Wentworth, we're getting about $20 rents, where we think like 18 is sort of like the good phase. But we really want to be 20 and greater. So when you think about Port Wentworth, the $24 rents, it makes it really awesome. The other thing that we like about this site is if you look at the map, and anybody from the Southeast knows, or Florida, you got to be by Publix. That's where everybody's going, right? If Publix is dropping anchor in your market, that's where people go. And you want to be in the area where people are transacting, they're buying retail, they're going shopping, they're going and getting their fast food, they're going to get their cell phone, whatever it might be. So we're actually right across from the high school that was just built, and then right down the street from a Publix that was recently opened as well. And then we're right by a country club and wedged where 4,000 houses are coming in. You can see all like the little brown spots around our subject site. And you can see there's just tons of houses coming in. So we really like this location. And we're just really excited about this spot. Now we're going to have the best property in the market. We're going to build this nice institutional quality facility. And it just gives our tenants something really attractive to move into. So we talked about that. So usually what we do is we go out and we raise, you can see we're putting about 45% of the investor equity into the deal. And then we go find a loan for about 55%. So we put about a 45% down payment on something like this. And then we'll finance it with 8% fixed rate debt. I believe we got about 7.75 on this. And then we'll do like a 7-year loan. And we do nothing but fixed rate. Fixed rate debt is really important, especially in this time where interest rates might be changing. Okay, so on something like this, our investment minimums are 100K, but we give you a little bit better returns if you do 500K or more. And so I'm not going to go into all these like splits and everything, but whenever you look at one of our investments, you're always going to have kind of a couple of different options based on investment amount. And a preferred return basically means you get paid before anybody else does, and you get that annualized based on your investment amount, so 9% or 14%. So this is kind of ground up. So this is like a really good example of, we find this really hot market where there's a ton of demand for self-storage, and we can come in and use our company, our construction company, to really build a brand new property in the market. Now, here's an example of a property. We just bought these three properties in the Pacific Northwest. Now, this was a crazy deal for us because we bought these properties were built in 2018, and we got this rare inside line to buy these properties for a discount. So I don't know if you're paying attention to anything about real estate. We bought these at a 6.6% cap rate. These are brand new and fully leased, 90% occupied properties, which is crazy, especially when we could get an interest rate for 6.38%. So we actually already bought this, and this one we actually have a little bit of room left in this investment, but we bought these last week. We closed on these on Friday, and I wanted to kind of walk through why we liked them. So first of all, 3 locations, 3 sites. And what we like about it was, again, we already have properties in this market. So we have 2 properties, one in Oak Harbor and Bellingham, that we're building new properties on. And so adding these 3 properties in Portland and Vancouver really kind of complement our economies of scale. We like to have at least 150,000 square feet at any market that we're in. And so when you think about Portland, Some big employers in Portland are like Nike, Columbia Sportswear, uh, Intel, et cetera. And so it's kind of a really good diversified economy. And it's kind of got the nickname Silicon Forest because while there's a lot of blue collar jobs, there's a significant employment population of white collar jobs. And I mentioned earlier about millennials, right? The reason why we like this market is the average age is about 38. So when you think about the customer segment that most uses self-storage, it's millennials. And when you think about a target-rich environment, that really kind of attracted us to Portland. We also like the fact that it's got really strong incomes. Average household income across the three locations is $124,000 a year. It's because millennials are in Class A apartments here, and they've got good paying jobs. Just some of the things that we found in Portland, like number two for fiscally fit cities, great universities, best cities for young professionals, great place to live. But what I love is, I don't know if you're familiar with this area. I mean, there's a Pacific Northwestern on the call, but right on the border of Washington and Oregon, you kind of get this cool tax advantage where people who live in Washington get the no income tax, and people who live in Oregon get the no sales tax. And what's cool about doing storage here, you might think, well, it's kind of a blue state, I don't want to invest there. It's easy to evict. Remember, we don't have a tenant landlord problem here. So we can evict our customers within 30 days if they don't pay, which is great. The other thing we like is that Portland is beautiful, right? You've got Mount Hood to the east, you've got the coast to the west, and I'll tell you what, when I go on vacation, I live in Seattle. I go south to Oregon, Central Oregon, Portland, Cannon Beach, tons of cool places to go, and it's what attracts a lot of people to the area as well. Now, when you're looking at storage, you got to see what your customer base is. So these are the three sites that we bought. And when you look at the density of people that live around your site, those are your customers. And so you want to make sure that you have a really healthy, strong population immediately surrounding your site. Now, our three properties in Portland and Washington that we bought are literally buried in major metro areas, which is fantastic. The other thing that we like to look at is how many new homes are coming in. And between the two locations here in Portland, there's over 25,000 new houses coming in or recently delivered in that market. That means more customers coming in. And the best part, within 3 miles of our property, zero competition in the pipeline. And if you're looking at self-storage, you should always consider that, hey, who is coming into the market behind me that could be a competition threat? And the last thing that we look at for location is traffic counts. So I would say if you're looking at a storage property, there should never be anything less than 10,000 cars that drive by your property every day. If there's fewer than 10,000 cars, it's just not a good location. Now, there might be some rare exceptions, like you have a really, really small property in a really, really small market and there's just no cars there. But generally, you want to have at least 10,000 cars. One of the facilities in Portland that we just purchased, it has 156,000 cars that drive by it a day. That is a ton, right? And so that gives you access to more customers. I mean, that is your marketing, right? I would say when you think about storage facilities, about 50% of your customers are going to drive by your site and know it's there. And so when they have a storage need, they're going to think, oh, I can just go to that one place that I drive by every day right by my house, because people aren't going to drive a million miles to go to a self-storage facility. They're going to go to the one in their backyard. And the other 50% of your customers are going to come from Google search. So we emphasize heavily 5-star reviews and paid ads on Google, because people are going to search storage near me and they're going to just lock in and go to your site, right? I mean, that's like any American's going to look at, hey, what are the reviews and how far is it, right? What are people saying about this place? And they're going to go for the high reviews and they're going to go for cheap, right? So good promotions and good ratings. And lastly, like I talked about this in the beginning, we bought this at a 6.6% cap rate. So the average self-storage right now is trading at 5.3% cap rate. So that means that suggests about a $10 million discount we got on these properties. So we paid $44 million for it. And if this was trading at market value, it suggests that we could get as high as $54 million. So investors are getting value day one, which is a really critical part about real estate. But anyway, that's all all I had to talk about. But we do have time for Q&A, and I know that people are dying to get in here and ask a ton of questions. So I wanted to make sure that we had enough time for that. But if you wanted to get in touch with me, that's our QR code. You can scan that to get our due diligence tracker. I actually encourage this QR code. There's some problems with the other QR code, but feel free to scan that. Or you can always email me. My email's on the screen, Ryan at Spartan-Investors.com, to get in touch with me or one of my teammates. And there's our website. So yeah, with that, Toby, let's jam on some questions.
Yeah, let me put the little legal disclaimer because this is going to go up on a YouTube channel too. This is not a solicitation for you to invest. You can certainly talk to Ryan and say like what type of stuff they might have available, but that's not the purpose of this. The purpose of this is to educate. And in that vein, let's talk about some things that are going to help educate them. Number one, I'm going to start busting through these. There are so many questions, Ryan. We're not
Okay.
going to get through them all. I got to tell you that right now.
Let's go rapid fire. Yeah.
Yep. Prices for existing properties have exploded. What are the, and that I always like it when somebody comes up with a fact, the statement of fact. They've exploded. What are the considerations for purchasing existing properties versus buying land and building, starting a self-storage facility from scratch and then leasing it and selling? Do you do
All right.
both? Yeah.
Yeah, we do both. I think we're living under the golden era of the time to build. And I think there's only one place I would ever build. So if you're like, hey, should I build here? I'm going to ask you one question, and your one question will quickly get to a yes or a maybe, or a no or a maybe, I should say. What is the cost of a 10 by 10 in your market? If it's not 160 per month for a 10 by 10, don't build there. You're not getting enough rent, right? So you want to get at least $18, $19 rents. So if you're not getting at least $160, if the other competitors are not charging at least that per month in rent, it's probably not a good market to build in. However, if you do find that market and you find some land for 1.5 to 2.5 million bucks, 5 acres off a main road, good traffic, good visibility, you can make a killing. And that's what we're doing. We're popping those up. That's Port Wentworth, right? $24 market. We paid 1.65 million for the land. Ton of people moving there. That's where the puck is going. That is a great opportunity. We're finding properties like we just tied up a property in Eustis, Florida, in Central Florida. Rents are $24. Bought the land for I think 1.4. That's a great opportunity. Buying existing, it really just depends. It's really hard to find existing properties right now because A, there's not a lot for sale, and B, you've got to pay a premium still. There's no discount. You might find a discount here and there, but there's really not a lot of distress in self-storage. There's not like a lot of foreclosures or loans going belly up. But there's opportunities out there. Don't get me wrong. They're just harder to find. And and the cap rates are still really low and the interest rates are high. So you might be doing the math and thinking, God, this thing doesn't cash flow. And you're probably right because the interest rates are really high and the cap rate's really low, and that's called negative leverage. And I know I know I'm going fast on it, but I mean it's just hard to make the deal work on you know, on an existing property. But there is some tremendous opportunities to build out there right now.
So this is one of those things that if you're somebody, you're not an accredited investor, you're not looking to invest, but you're looking for something that where you might be able to make money. This is one of those
Yeah.
areas where you could go out there and bird dog, put properties under contract and sell that contract to groups like Ryan. So if you don't
Yeah.
have,
Only if you sell to us, though. Yeah. Only if you sell to us.
yeah, if you don't have two nickels to push together, right? If you're somebody
Yeah.
who's going to be bootstrapping, that's what you do. You find out what somebody's looking for, and then you go find it in your market. There were a bunch of haters from California, like, why not California? Like I had a bunch of those. And then a few from Arizona that were like, why not Arizona? Why not California, Ryan? What the heck, man?
Yeah. Uh, I love California. And in fact, if I go on vacation, I'm probably going to California. So like nothing against California, quite the opposite. We just, it's hard to develop there. It's hard to invest there. It's tax burden. We just kind of stayed away and, kind of opportunities sort of find us sometimes. And we just haven't found a lot of opportunities there. We'd love to go to Phoenix or Arizona. Again, we just, we tried and got outbid and just haven't been in that market yet. There's nothing wrong with it though. Yeah,
You're not going to chase. You're going to find the right deal at the right price, and then you're going to execute.
that's right. That's right.
Don't discriminate against places, but the numbers. See, I'm giving you the politically correct way.
I
Uh,
like it. I like it.
are Spartans offerings for non-accredited investors?
They can be, yeah. So you do have to have a conversation with one of our teammates. You got to get to know us. So just schedule a call with us and then they can be. Yes.
There you go. All right. And then some people
Yep.
were asking about minimums. Is 100,000 really the minimum? And I have no idea. What do you
You
guys?
know, yeah, so 50K has been our minimums for a long time, but just ask us if we could take a 50, and usually we're okay with that. But we just changed it to 100,000. But yeah, for Anderson folks, I mean, we're always happy to accommodate a lower minimum. Yep.
Here we go. 700 million equity deployed through Spartan or market value of properties.
Market value properties.
Market value of properties. What zoning do you need? Do you build or only buy existing? And how many units? Well, we already answered that. And how many units of existing or how many acres do you build? I think you answered
Yeah,
that.
5 acres. You can be zoned. I mean, look, ideally it's industrial or commercial or storage, zone for storage, like a lot of use. But like if you got some land off a freeway that like could be changed in zoning, we'll buy it. We'll look at it. Um, and then number of units, unit count it's kind of meaningless. We look for square footage. We like 50,000 square feet or bigger. They could be really big units or really small units. So that might, the unit count might be like 200 to 500. So don't look at the unit count, look at the square footage. About 50,000 is what we like.
Fair enough. Here's one. This is consumer use, right? This isn't commercial warehouses that you're doing.
Correct. Sometimes we buy properties that have like a commercial industrial space on the back or something like that. But yeah, this is mini storage, personal use.
All right. And then what's the exit? What's the exit for you guys? What's a typical time frame? And then uh you answer that, and then I have a follow-up question.
3 to 5 years. And we're selling to everybody, like 1031 exchange. We'll sell to a local mom and pop who's got 3 other properties already there. We've sold to the big REITs. We've sold to the institutional buyers. Everybody's buying these things.
Yeah.
Three to
No,
5 years. Yeah.
it is the hot ticket, guys. Now,
Yeah.
that said, that's why it's probably better right now to build if you can find the land
Mhm.
and build, because the numbers are great. But you guys also have a fund that is a lending fund, right? Like, don't you self-finance a lot of these?
Yeah, we have a debt fund. So if you just want to participate in monthly payments of 9%, we have a debt fund for that. So you can just get monthly coupons from the loans that we make out on these properties.
9%.
Yeah, 9% paid monthly.
Not
Starts
bad.
right away.
Uh, a lot less moving with interest rates high and people staying in their homes. How do you see this impacting short and long-term usage?
I love this question. So, yeah, about 25% of our customers right now are gone. They're just not transacting because home value or home sales are 38 or in a 30-year low, right? 28-year low, whatever it is, because interest rates are high, right? Everybody's in a fixed rate. No one wants to move. No one's selling their houses. No one's moving. Likewise, no one has distress. No one is like losing their house or whatever right now. It's kind of like we're kind of gridlocked. So I like to say like we're right at this point of like we're still getting lots and lots of occupancy and storage, but we're missing like an entire customer segment. So if you're a believer that interest rates are going to go down, fine. If they go down, the housing market's going to explode. And guess what? Everybody who's been leaving their storage moving needs to the side, all of a sudden it's going to go crazy, right? If interest rates go down. If you're like, I don't think interest rates are going to go down, I think they're going to go up. Okay, great. If they go up, you're going to get distress, and then people are going to start moving. So the reality is, I think we're getting severe pent up demand right now, and I think either way, I kind of want whatever we're going to start doing. I can't wait for it to start happening, so we could just get going, right? Which is like, can we just lower interest rates or raise interest rates, just get it over with, so that we can get back to normal? And here's the opportunity, and why ground up development is so why we're so focused on it. A lot of operators can't get their projects done. They're losing their permits because it's hard to permit. Their construction costs are out of whack, and they can't get financing. So there is a huge cancellation of new storage starts. That means that you've got all this pent up customer demand, and not as many people are building. So you're going to have this major supply demand problem coming up with storage in the future. So I'm pretty excited about what's going on. Yeah.
I am too. I'm waiting for, like, the Fed keeps saying, like, I like reading their documents, and they say we're going to lower interest rates, and then they don't.
Yeah.
But then again, they also said that they thought inflation was going to stay in the ones or something.
Yeah.
That inflation was transitory, right?
Yeah.
Uh,
Driving us nuts.
yeah, they. I won't say what they're driving me. Um, are there any rent control regulations? How often do you increase the rents?
Whenever we want. Every 30 days we can adjust the rents. Like we just raised rents on 10,000 customers effective June 1st. There is no rent control laws. It is the wild west for storage. It's a 30-day notice.
Some states, do they have easier laws to evict, or are there states you avoid?
Yeah, so the only differences will be the number of days for notice, and that's it. There's no eviction laws. We can kick people out.
Just to give you an idea of how far back these questions go, right? Now we're talking
Yeah,
about
yeah, yeah.
who gets the excess cash if the items are sold out of a unit? Do you have to give it back to the renters, or do you give it to the state
Renter.
renter? What
Yeah,
if
the
you,
renter gets it.
what
Yeah.
if you can't find them? Do you just mail a check, and then if they don't,
That's a really good question. I don't have no idea. I'm sure the our
I'm sure you
auction company,
I'm sure you have to send it to the state if they don't claim it, and then the
I think
state
you're right.
with unclaimed funds, they always hit me up for that because I'm on all the entities, and I'm like, yeah, I can't. No,
I like
you're
that.
rich if I could, right? What are you paying the property managers?
Like $20 to $25 an hour in benefits. Yeah. Pretty typical. I mean, it depends on the market. I mean, we might pay a little less in certain markets and a little bit more in others.
Somebody looked at your website already and they said you have a map and it says priority listed on it. What's up with that?
Priority? Oh, that's interesting. I don't
It's
know.
on your map, probably because that's where you own the property. I have no idea. Do you know
Probably,
what
yeah.
that is?
Or maybe markets that we're focused on.
Yeah, it could be.
Yep.
I have no idea. I wish I knew. What I would do is reach out to Ryan's team and say, "Why the heck
Yeah,
do
let
you?"
me know. Point it out. Yeah. We're
Uh,
always improving our stuff on the website.
Somebody says we are. I wanted to understand the tax advantages. I already went over some of that. I'm not going to belabor that. Where do I find listings for storage units for sale? Is there such a thing?
Yeah, self-storage auctions.com. Oh, you want to like to buy property.
Yeah, they
Just
were.
Google self-storage is for sale. There's like 25 different sites. It is a very messed up industry. Like there's not like a redfin.com or a zillow.com. Like there's like 25 different listing sites, like self-storage.com I think is one, and I don't know, there's a bunch you can buy them on, but just Google it. There's no like one place you can. I mean, you can also go to, what's that commercial app that everybody uses?
LoopNet.
LoopNet is another one.
Yeah.
Yeah.
Who has access to the office if no one is on site?
No one does. Yeah, so our offices are open from like 8 to 5. And then our gates, though, like you can access your units from like 6 a.m. to 9 p.m. But when the office manager leaves, then the office is completely locked up and closed.
Yeah, so somebody's there. Somebody's there when they're selling tape and stuff. Do you ever
Yeah,
have problems with break-ins at any of the units?
absolutely. Oh yeah. Yep.
And that's why
Theft is a real thing.
they have to carry insurance on that. That's why you require it so that somebody's not coming
Yeah.
after you saying, "Hey, you were negligent. You didn't have enough cameras, right?" You're not going to be able to stop people from doing what they do.
Yeah, there's always going to be break-ins. You should plan for it if you're planning to own one of these things.
hmm the same question. Where do you find these things? You already said. Do you ever have problems with people trying to live in the units?
Oh yeah. Yeah. Yeah, we kick them out, but um yeah, we've had people live in the units before. Yeah, and when you find it, you just deal with it. So
Did they say, "I have squatters' rights. You can't remove"?
no, fortunately not. It's been pretty, hey, you can't live here. We'll help you find yourself on your way here. But yeah, I mean, when you own all this real estate, I mean, you're gonna have issues, right? You're gonna have all kinds of things that pop up, and you got to have a team in place ready to deal with it. And I think we have problems every day, right? So I joked about my presentation failed. It's like, yeah, whatever. I mean, you're going to run into these issues, and that's why you want to make sure you're partnered with somebody who's like well versed and well worn on the playbook on how to handle tenants and units and living people and stuff like that. So yeah,
All right, there's 60 more questions, right? We're not going to be able to get through even a portion of them, but I'm just going to ask really quickly. Fakiso, they were talking about how much makes it worthwhile to invest in these, assuming that you were investing it out of your own pocket. What makes it worth it? Do you need multiple units? Do you have to have a whole bunch of self-storage, or can you get by with just doing one or two?
I mean, if you want a job, buy 100 unit in the middle of nowhere, and then you're going to be answering all the phones and you're going to be doing all the work. If you want to scale, get 50,000 square feet and make sure it has enough money generated to pay someone to be there full time. and make sure it's making enough money to get the property management software that's going to set you back, 800-900 bucks a month. But yeah, if you want a job, buy a real small one in the middle of nowhere. You're going to be answering all the calls and doing all the work and figuring out who's going to go sweep the units. But I think 50,000 square feet is a minimum to make it not a job, right? To make it, we run into this problem all the time. We're buying properties from from family offices, and they're like, yeah, we thought we could manage this from California, and the property's in Tennessee, and we're just like, man, this is a lot more work than we thought, and we're selling it. And so you just got to be really careful about, I like to say, oh, this is easy to own, easy to evict, easy. I got 150 employees running this thing, right? Like I have someone like with a ton of experience doing this. I don't, this isn't something that you just casually do from a far away on your first one, right? So make sure you have some scale and definitely take some training. Go to like ISS, the Inside Self Storage Association or Self Storage Association, and take the classes and learn. And we spent 2 years learning this space before we did anything in it. We didn't just jump in. We took education for effective action, but be
Mhm.
careful about it turning into a job. Yeah,
Okay. How much capital do I need to start? It sounds like you could invest in a fund for
50 grand.
50, but yeah, otherwise zero if you're going to go be a headhunter. Um,
Yeah, yeah.
Number of units too small. If you said 50,000 and below, that means what is that? 500 units?
Yeah, I mean, it depends, right? I mean, sometimes the average size of a unit's 200 square feet, so a 50,000 square footer is going to be, 250 units or whatever, right? So, um, you just want to. It just depends. Yeah, I would say minimum units generally 150 at least, if not more. So,
Here's a great one with a conclusory statement. How will the upcoming commercial real estate crisis affect self-storage investing?
well, that's a good question. If you find the answer, let me know.
Yeah,
So,
there's a
no,
crystal
I
ball
think,
out there. I just love it.
yeah,
Like I'm
yeah.
not
I
making
mean,
fun of anybody, but God, they've been predicting the real estate crash for the last 3 years.
yeah,
I got called a clown on one of these. Some guy was just totally trolling me because I didn't think the real estate market was going to crash. And I do believe that was 3 years ago. It's like, you got to
yeah.
be kidding me. Like, come on. Nobody's got a crystal ball.
No one's got a crystal ball. Yeah, I mean, I think lending will get challenging and it'll get harder to build. I mean, it's already happening, right? Like lenders are tight and these less of these are getting built, right? Because people can't get the financing. And, so I think that's an impact. And people aren't moving a lot, right? Because there's not a lot of housing selling. And so that's lowering, so a lot of things happening, but who knows?
I
Yeah.
just look at stats, right? It's not like foreclosures are going through. They're still really low, really,
Really
really.
low.
Residential's really like ridiculously low historically. Oh, but it went up 30%. That's because like there was like three and now there's four, right? Like
Right. Right.
it's like it's a really small amount, but commercial, no, I know we have a whole bunch of resets and we have these loans that they're gonna have to refi them at larger amounts. Yeah, that's gonna cause some shakeout. Is it gonna cause a crisis? Commercial just I think it got smoked during COVID. We're just not seeing it come back, which is there's gonna be lots of ways you're gonna use it. Self-storage really, because of the weight loads, probably not good for like an office building. You probably can't do it, right?
Yeah, it's a little bit too heavy. I think it's like 125 pounds per square foot, and office is usually like 115 to 120 or something like that. But yeah, if you're bottom floor or basement, it works, but it's hard to make it stack, multiple stories. So
Yeah, there are going to be a lot of open commercial, but we're going to find ways to use it. That's the thing. Is Americans are
yeah,
genius when it
and
comes to finding ways.
and just yeah, really quick, I see a cost in there about question about construction. We actually will build your self storage facility for you as well, across the country. And someone asked about the cost of the Seattle market, and that's a great question. We actually build around here, and we can answer that question, but it really depends on your site. It just depends on where you're building. So,
That's a great one. So if somebody finds land, you'll build it.
yep,
Do
we'll build it for them. Yep.
do you charge them just a set amount to build it?
We don't charge a set amount. We'll just give you a bid for the site. So we'll and we do most of the site work. We'll do everything. I mean, we'll permit, develop it, whatever it might be, take it through, turnkey. So, um, and we're building around the country for anywhere from 80 to $100 a foot. Just depends on your site.
Mhm.
Now Seattle, it's going to be a little bit more expensive because you get some taxes and some things like that. And if you're building multi-story, the cost is going to go up. Um, and if you're building downtown, your permitting costs and utility costs and all that stuff. I mean, it just really just depends on where you're building and what the site work is and things like that.
Fantastic. Awesome microphone and great audio. Please share the brand and model.
It's the same one that Joe Rogan uses.
Is it a Shure?
Sure. It's a Shure. Yeah. Yeah. Props to this is my podcast studio for passive income pilots. So got the mic up.
All right. How long have you been in storage investing?
7 years.
7 years, and you've managed to get up to 700 million. Jiminy Christmas.
Yeah.
Uh,
10 years is 10 years of Spartan and 7 years of storage.
somebody says you should. I need to mention that there's recapture when you sell a 1031 or an installment sale. Ray, there's depreciation recapture anytime you sell real estate that you've depreciated. So there's always recapture. The way you offset some of these things, you could 1031 exchange. You can buy other properties and take that loss and offset your taxable income that way. A lot of folks think, well, it's passive, right? So it could never affect your capital gains. When you sell a property that's passive and you have capital gains, it's considered passive capital gain. So actually you can use other passive income to offset it. But yeah, you should always be aware of your recapture, and especially if you're doing cost segregations, it's something you need to calculate. Though in most cost segregations, depending on what you're buying, there's not much value left. If you've held it for 5 years, a lot of that has been already depreciated, and there's no value in what you're selling to somebody else that causes the recapture. Though it's treated as ordinary income. So yeah, there's always some little nuances, which is why you keep a tax person in your back pocket and make sure you're running that by them. Do you guys? I'll add the last question. How about this? Because there's so many, but I don't want to keep everybody here all day. We're about 8 minutes over anyway. Does Spartan or their principals have any skin in the game in the investments?
Oh yeah. Hundreds of millions of dollars on loans, hundreds or millions of dollars invested into our own projects. Lots of skin in the game. And it's our livelihood. It is literally what we live and breathe every single day. And if we didn't get to your question, shoot your question. You can shoot your question to Ryan at Spartan-Investors.com, and I'll knock it out. I'll have a fun afternoon answering questions via email. So
You beat me to the punch, guys. If you have a question, and there's 40 of them sitting here that are pending, reach out to Ryan, or if you send it to my staff, we will make sure that we get you an answer. If you want to, somebody says the link is not working, aba.link. You guys probably broke it, right? No, I'm just kidding. Our staff will take a look. The aba.link, let me just see. I'm going to go to it right now. Let me see. Oh yeah, it works. I just clicked on it.
I
So
just clicked on it too, just to I was like, oh, let's see if it works.
all right, so somebody says it's not working. Maybe it works, but try typing it in or try clearing your cache and try it again.
The
Uh,
link's on the screen too for the QR code. That's the same thing as the link.
somebody says, "Do you?" I lied. Last question. Do you have to exit after 5 years? Yeah. Well, you could probably buy.
No,
No,
no, you don't have to exit. Yeah. So we actually will offer like a 1031 exchange or some kind of entity sale that allows an efficient rolling of your investment into something else, a tax efficient exchange. So yeah, we've done that in the last few exits that we've had with investors.
your basis will stay at whatever its point was. See, there we go.
Yeah, I
Somebody
like it.
says, leave the blue state comments out of your presentation. We weren't saying anything
I
about.
know, I know. What we don't judge in self storage. Blue state, red state, bring them all.
You
So
just bought in Oregon. Come on, and talk
I
about
know, I know. Hey, no sales tax, no excise tax, no tenant landlord laws for us.
you know,
Who
just
cares?
invest anywhere where the numbers are good, right?
Yeah,
Uh,
totally.
you can invest in any state, and no state's better than another, right? It's just some
Yeah.
states a little
I mean,
harder.
it's funny, like we're big in Texas too, right? I mean, and the property taxes are insane there. People think, oh, Texas, it's the land of the whatever. They crush you in property taxes. We have attorneys that all they do is fight our property tax assessments in Texas. I mean, it is a bloodbath.
We're
They get you,
doing the same thing. You got it. That's exactly what you do. Every flipping, what is it?
yeah.
Every year, it
Every
seems
year they reassess you and you got to go fight it and pay all this money. And it's like, wait, I thought we were in Texas, And yeah, no income tax there either, like Washington, but man, they crush you in property. So if you think that, the one state's more, whatever advantage than the next, you got to be ready because they're going to get you. They want their tax money and they're going to try to shake you for it in any way that they can. So you just got to be ready to pivot, however you need to fight stuff like that. So,
And Florida is talking to Texas now saying, hold my beer. Right. There's some of those places it's getting like, I think Dade County is like 3%. It's just something.
holy cow. Yeah.
Yeah. Yeah. They're just, some of the states are looking for money.
Yep.
Got to be careful. All right, Ryan, thank you for coming on. Thank you for sharing. You always do a
Yeah.
great job. And for folks that want to find out more, reach out to Ryan. You can reach out to our staff as well. Share this with anybody you think would be interested in self-storage to learn a little bit about it. Again, it's not a pitch. We're not trying to get you to invest. What we're trying to do is get you to learn about an investment class that goes unseen, doesn't get a lot of the hoopla when they're talking about what to invest in, but it's really interesting and you should learn about it. It'll make you a better investor, if nothing else. And that's it. So thanks again, Ryan.
All right. Thanks, Toby. Good seeing you guys.